Good day. Welcome to our next company webcast. My name is Joe Dorame, managing partner of Lytham Partners. I would like to welcome Quipt Home Medical, who trades under the ticker QIPT on the NASDAQ and TSX. For today's webcast, Greg Crawford, Chairman and CEO at the company, will be taking us through their slide presentation, followed by a brief Q&A session. Greg, I will now turn the floor over to you.
Thank you, Joe, and thanks everybody for joining us today. Quipt Home Medical is a full-service provider in that of home medical equipment specializing in respiratory. So just some highlights to kind of get us started here are we close on a fiscal year in that of 9/30, and that so we just reported in that several weeks ago, and that our fiscal 24 revenue came in at $245.9 million. For the fiscal year, we had about $57.9 million worth of adjusted EBITDA. We completed over 850,000 deliveries, and we touched over 314,000 patient lives from over 45,000 referring physicians. As Joe mentioned, that we are dual listed on both the NASDAQ and the TSX under the ticker symbol QIPT. We currently have over 135 locations across 26 states with over 1,200 team members. Some of our investment highlights there is that we had just over $35 million of cash flow from operations. We do have a very highly recurring revenue model, so our revenue is very predictable. It's 78% recurring revenue between rentals and our resupply business. We've got a very nice balance sheet. We've only got 1.6 times net leverage and debt, and we've currently got just over $50 million worth of liquidity, and that to fund any future growth, and that for both organic and inorganic opportunities. And inside ownership, and that has just over 10% of the outstanding shares. In our field, and that we have a very strong demand in that for respiratory products. So some of the tailwinds in that is 10,000 Americans turning 65 or older every day, and that so that's kind of a big part of what's driving the growth in that we're seeing in that within our industry. We do have a very unique in that strategy, and that for our go-to-market, and that with our end-to-end solution for our respiratory and our HME products, as we're able to bring a patient onto service, and that early in the onset of a disease state, and carry them all the way through, and that any products and services in that they may need. Our history in that has been, we dual listed on the NASDAQ in May of 21. At that time, we were only covering about 15 states, and we surpassed about $100 million worth of revenue in December of 23, and that we had 26 states covered, and we had surpassed the $245 million revenue mark in fiscal 24. As far as our path forward in that, it'll be very similar in that we will still continue to look for inorganic growth opportunities via acquisition, and also in that for organic growth, in that we expect to see our organic growth in fiscal year 25, and that to return to that mid-single digits where we've historically been. Once again, we have that very strong recurring revenue model at 78% recurring revenue, 22% is sales. Our service mix in that is derived from home oxygen therapy is 14%. Our sleep therapy devices is 17%. Our ventilation is approximately 9%. Our home medical equipment is 19%. And our sleep supplies is 37%. So in totality in that, we're just about 80% in that in total respiratory, and then our complementary mobility and home medical equipment to kind of round that out. We do have a very diversified payer mix with private insurance, and that accounting for about 40% in that, which would be all the large insurance carriers in the U.S., such as Anthem, United Healthcare, Aetna, and that we have in our network. Traditional Medicare is approximately 25%. Medicare Advantage is approximately 10%. The state Medicaid programs is around 7%. And then our private and patient pay comes in at about 18%. Once again, in that we have solidified a big presence in states that have a high prevalence of COPD, which has been one of the cornerstones in that to our growth in that we've seen over the past several years, and that with a big presence there in the Southeast, the Midwest, and then the Northwest and the Southwest. Some of the industry tailwinds, again, that's kind of supporting some of the organic growth in that we're seeing once again is the 10,000 Americans turning 65 or older every day. It's estimated that there's 16 million COPD sufferers in the U.S. alone. It's estimated that the U.S. population for sleep apnea there's over 80 million. And then also the number of Americans with 2 or more chronic diseases, and that is at just over 31%. So we've got some great tailwinds and that to continue to help us with the organic growth. Also in that, there's been a lot of talk in that within the sleep therapy market and that about GLP-1s. I'm happy to report to date in that we haven't seen any decline in our resupply business or anything as it relates in that to GLP-1s. Also, there's a lot of positive correlation between GLP-1 and sleep therapy. There's currently a study from one of the largest manufacturers in that sleep devices, and that's about to encroach on a million patients, and that patients that are on GLP-1s and that were also on a sleep device are patients in that were prescribed a GLP-1 are 10% more likely to initiate sleep therapy. Also, patients that were on a CPAP and were also put on a GLP-1, and that is that they're seeing much higher resupply rates and that they're ordering supplies more frequently. So all of those things are great for Quipt's sleep therapy business, and that which accounts between the supplies and the actual devices for almost 50%. Some of our market positioning that how we kind of get our business in that is what I like to refer to as the order life cycle. We have boots on the ground sales team. They call on physicians, hospitals, home health, anyone that would be discharging a patient into the home setting. They will get orders. We get orders on a daily basis, and that from those call points, once we receive those orders, our customer service team and that will verify with the insurance and obtain any pre-authorization or anything that's needed for that. Then from there, it goes to our distribution team. Our distribution team consists of our respiratory therapist, our patient service technicians. They provide all of the setup, delivery, and education and everything. Once that patient initial setup is done, then it goes to our RCM team. They work the revenue cycle on that and ensure collections from the insurance companies. Once again, that diversified product mix that we had just talked about is across all spectrums in that of respiratory, and then our complementary custom mobility and home medical equipment products. Our patient-centric ecosystem in that we have, and that allows us to remote monitor in that certain patients in that are on, for example, home sleep therapy devices and ventilation therapy, is that we're able to monitor those patients and ensure in that they're utilizing those devices to ensure in that we're able to improve the outcomes in that for those patients. Once again, we do provide the in-home delivery and setup for the majority of our products, and that is where this all kind of takes place at. And that's across our 130 plus locations, and that across 26 states. Next on to our growth strategy, and that is once again, and that we're focused on returning to that mid-single digit and that annualized organic growth. Also in that synergistic acquisitions and that would complement in that either current locations or entering into additional geographies. Once again, we have a very modest balance sheet in that with only 1.6 times net leverage and just over $50 million in current liquidity. Driving economies of scale, and that this is truly an industry of scale, and that is a big part of our past growth and that in our success and also our future growth. So you can kind of see by the chart here that shows in that our growth and that you know that we've had really since 2020. We've gone from just over $70 million in revenue in 2020 to just over $245 million in 2024. During that time frame, in that we've seen our adjusted EBITDA margin, even with inflation, and that we had taken on in 21 and 22 of a CAGR of about 2.6% adjusted EBITDA margin. A big part of our operational efficiency, and that has been our technology utilization. And that we talked a little bit about the remote patient monitoring, so being able to handle large volumes of patients and help educate those patients so they're able to utilize their devices and receive the benefits is one. Also, we have our automated reporting and KPIs and that we utilize in that for the operations of the business. We have our automated resupply program in that where patients are able to order in that their resupply as they see fit. And so we've had a total commitment in that to technology and that throughout the organization that's allowed us to become more efficient in that as we continue to grow, and kind of touching on all kind of the biggest areas in that where it's really helped us within the business has been our revenue cycle, our order fulfillment, finance and accounting, and of course in that our project management areas. Our financial profile and that here in that for our Q4 that we just reported in that a few weeks ago is that we've seen a 3% increase in total revenue. We had 21.8% adjusted EBITDA margin. We did during that same time frame though, we did transition in that from IFRS accounting and that to GAAP when we lost our private foreign issuer status in that when we started our new fiscal year. So some of these numbers in that when you go back and look at these in that will show the prior IFRS reporting standards that we had to report under, and then now our fiscal 24 was reported in GAAP, and so will any future quarters and years that we report. So our full year results is that we've seen a 16.2 increase in total revenue, a 14.3% increase in adjusted EBITDA, our adjusted EBITDA margin, and that came in for the year at 23.5%. We've seen a 10% increase in our patient base. We've seen a 13% increase in our resupply deliveries in that for that year. So we continue in that to see a nice growth within the business, even despite in that different challenges in that we had faced and that in fiscal 24. Our capital structure and inside ownership, to go back over that again, is currently in that have $132 million market cap. Our enterprise value is about $217 million. We have 43 million outstanding shares, basic shares. We've got about $34 million worth of senior credit facility available, and then we've got about $16 million of cash. And then once again, in that the management and the board are fully aligned with our shareholders, is that we own just over 10% of the outstanding shares. Management team, myself and that CEO and chairman, I've been in healthcare services for over 30 years. I've been with Quipt since 2016 when I sold my private business and joined Quipt at that time. Hardik Mate is our CFO. Hardik has been with the company in that since 2018. Prior to that, he was a consultant for the company. Tom Rarick is our current in that chief accounting officer. Tom's been with the company about 5 years now or so. Tom's got over 30 years of experience in accounting and finance. Our board of directors, and that we've got 3 independent directors. Mark Greenberg's independent director. He's got a background in investment banking and also debt in funding transactions. Brian Wessel, and that is an independent director. He's also chair of the audit committee. Brian's got over 30 years of experience in that in the accounting and audit world. And then Dr. Kevin Carter, independent director, is a board certified sleep physician. I can now open up for any questions or anything.
Great. Greg, thanks for that overview. Let's touch on a few questions here. First, what is your outlook for organic growth for calendar year 2025? And when do you expect to return to historical levels of 8 to 10% growth?
Yeah, very good question in that. So as far as the organic growth in that, we anticipate in that then in fiscal 25 and that we will return in that to those historical kind of mid-single digits to that 10% range of organic growth.
Very good. Next question. Can you provide more color on the pipeline for inorganic growth opportunities?
Yeah, so we're seeing actually in that a flood of acquisition opportunities in that have really came in, and that the market has been really quiet in that over the past couple years or so. And there's really in that we feel there's kind of a backlog in that for potential transactions and that could happen. And we're actually not even doing a whole lot of outreach. We've had a lot of inbound that's kind of been coming into us. We're also starting to see in that kind of some of the multiples maybe take a turn down in that from where they were historically. So we think that's good news in that as we kind of get back on the acquisition trail here in fiscal 25.
That's helpful. All right, last question. How is demand for a heavily respiratory weighted product mix?
Yeah, we continue to see strong demand in that inside our home oxygen business, our sleep therapy business. Those are probably the 2 biggest ones that we continue to see the strong demand for. I think just the overall aging population and then the number of COPD sufferers continues to drive that home oxygen market along with the ventilation also. And then on the sleep therapy side in that there's a lot more patients are getting into the health systems there in that as they want to learn more about the GLP-1s. So that's kind of driving more people into the health system. So we continue to see strong demand for the sleep. And even on the sleep side, we're hearing from on a routine basis from our sleep physicians and our sleep lab referrals that they're backlogged and that to get patients in for testing and that. So we think that is all good news in that for us going into fiscal 25 here.
That's great. Thank you, Greg, and thanks for everyone for watching. If you have any questions or would like to schedule a meeting with Quipt, please send me an email at dorame@lythampartners.com. That's DORAME@lythampartners.com. We have a few more presentations coming up next, so please stay tuned. We wish you all a good day and enjoy the conference.
Thank you for joining us today. Bye-bye.